And from Frankfurt, we cross over to our London studios for the London Markets Report. My colleague Simon Pusey joins us now. Hello, Simon. Good afternoon. Thank you for joining us on the show.
Afternoon.
Right, we've seen it's the final trading day of the week across many markets around the world, and that includes London. The equities markets were in the green as at 12 o'clock Nigeria and London time. Now, this is despite the U.S. hiking duties on $200 billion worth of Chinese products. Bring us up to speed with market developments, both on the equities and currencies at the moment, and some of the factors you think are driving sentiment.
Yeah, so that row between China and the US is really the thing that's affecting the markets here as it is everywhere else in the world. I think we can bring up some numbers and look at the markets now. The FTSE All-Share, obviously the main market there, that is on 3973 points. That's a 0.46% rise, and that's quite surprising given that sort of row between China and the US. Let's look at the FTSE 100 now. Obviously, the market that a lot of people talk about. That's the biggest 100 companies. London's top share index clawed back most of the losses that were made yesterday, with confidence shored up by solid gross domestic product data. So the GDP comes out every quarter, and this is up 5.5%, which is a big rise, only up 0.2% in the first 3 months, and that's bang in line with forecasts. So that's a real boon, really, to the UK markets. The FTSE 250, that's the largest 250 companies on the LSE outside of the top 100. Well, that is the highest today. That's rising by 0.93%. Now, if we take a quick look at the currencies, the pound has slipped on the dollar. That's really talking about the uncertainties with Brexit. So a lot of the time people are looking towards Brexit and what the possible outcomes are there. And the Labour Party talking to the government doesn't seem to be going too well at the moment. So the pound has slipped there against the dollar. That's down by 0.12% against the dollar at around $1.30. You can see against the euro it's down by 0.08%, and finally looking at the pound against the Japanese yen, that's valued at 142. That's up 0.11%.
Right, so what's on tap for the London market next week, from politics to economy to business, and maybe from the financial city district itself?
Well, I mentioned Brexit there. That's got a large part to do with what's going to happen next week. Labour and the government will be talking once again, and if there's a deal, then maybe the pound will rise sharply, maybe the markets will rise sharply if that is a deal, but that looks really unlikely at the moment. It looks like there's going to be more uncertainty, and therefore the pound will struggle and the markets will continue to struggle as well. We've also got trade talks, obviously, between US and China. That's the main factor that's really affecting the markets and the pound. So if, again, they can find an agreement, then maybe those will solidify. In Northern Ireland, this is quite interesting. The government has not met in Northern Ireland for many months now, and there are talks ongoing between the British government, the Northern Irish government, to try and get that sorted. Again, that could affect the pound and the markets there. And lots of people are watching the fashion chain Select, which has fallen into administration. So news on the jobs there, 1,800 jobs there at risk. And lots of people will be looking at that next week. And finally, we've got the story about billionaires. It's been a good few months and years for billionaires in the UK since Brexit. The 15 Britons on the UK billionaire index have added $28 billion to their net worth. Their combined net worth is $109 billion. So obviously, I'm part of that club, so I'm a happy boy.
Simon, well, I think we have to keep a tab on those stories, and perhaps we look into them deeply next week. Thank you for your time. And moving on now to Asia, stocks in China rallied on Friday after the U.S. carried out its threat and raised tariffs on Chinese goods at midnight. Mainland Chinese stocks bounced following an earlier wobble. The Shanghai Composite rose 3.1% to about 2,939.21, and the Shenzhen Composite also jumped 3.83% to close at around 1,568.62. The U.S. increased tariffs from 10% to 25% on $200 billion worth of Chinese goods at about 12 a.m. Eastern Time on Friday, even as the White House said negotiations will continue. Meanwhile, Hong Kong's Hang Seng Index added around 1% as of its final hour of trading. Elsewhere in Asia, However, the picture was mixed. The Nikkei 225 in Japan fell 0.27% to close at 21,344.92. The Topix also declined fractionally to finish its trading day at 1,549.42. In South Korea, the Kospi was 0.29% higher to close at 2,108.04, while the ASX 200 in Australia finished 0.25% higher at 6,310.90. And Wall Street is set to open lower on Friday as President Donald Trump said there's absolutely no need to rush on a trade agreement with China. Futures on the Dow Jones Industrial Average fell 108 points in the morning, implying a lower open of about 103 points. The S&P 500 and Nasdaq were also set to open lower. Trump said in a Twitter posted Friday morning he could stick with China tariffs for a long period of time. The comments came after he slapped higher tariffs from 10% to 25% on $200 billion worth of Chinese goods. And Nigeria's bonds rallied and the naira currency firmed on Friday after Central Bank Governor Godwin Emefiele was nominated for a second term at the helm of the bank. President Muhammadu Buhari, who has backed Emefiele's monetary policy, nominated him for another term, according to a letter read on the floor of the Senate on Thursday. The Senate is expected to confirm the nomination. Mr. Emefiele has overseen an interventionist currency policy at the behest of the presidency, propping up the local naira by pumping billions of dollars into the foreign exchange market. He also introduced a multiple exchange rate regime to try to mask pressure on the naira and avoid a series of devaluations, a step that has kept liquidity tight in Africa's biggest economy. The bank cut rates to 13.4% in March, its first rate cut since November 2015. The rate has been held at 14% since July 2016 to support the naira and curb inflation. And when we come back, of course, we cross over to South Africa and get an update on what's happening with your elections and, of course, how the week has been with the markets. Do stay with us.